Hey everyone, Sean Corbett, True West Realty Group. I have got a special podcast today. A little unusual for me. It's a whole different space. We're going to be talking about Bitcoin mining. I don't even know a whole lot about it, but we're going to learn a whole lot about it. I've got two guests with me that are very well entrenched in it from an investment standpoint and why even look at evaluating it for your portfolio. I've got Chris Ransdell here. From Tulsa. We're gonna give him a chance to tell a little bit about himself and his background. And then I've got Giovanni DiFrancio from Monaco. Isn't that right?
That's right.
Yeah, I know you're living in the area now.
Francishi.
Francishi. De Francishi.
Yeah.
Okay. Very common name. Like
Very.
we see it all the time.
Yeah.
So that's kind of what we're going to be talking about today. We're going to do an interview style. I'm going to interact with you guys. I'm going to give you a chance to kind of talk openly about your experience with it. But I always like to start with credibility and background. That's usually a great place to connect with the audience that way. So Chris, I'm going to let you start.
Sure.
Tell me a little bit about your background and don't go all the way back to birth because we talked about that offline. That wouldn't help us. Where the value of your experience may actually contribute to your understanding and Bitcoin mining would help. So we'll start with that.
Well, I was born and raised in Fort Lauderdale, Florida, moved out to Oklahoma, junior high.
Go.
I was privileged to be homeschooled, so it gave me the opportunity to kind of be that overachieving homeschool brat. And
Were you first in your class?
first, second, and third.
Okay, good.
Depending on the day of the week.
Okay.
So I really enjoyed exploring 3D animation very early on. And 3D animation opened up doors for me right out of high school. So I got a senior position at a firm at 18 in 3D animation and special effects. That led into video production, and that company started going into capital campaign management for architects and buildings. So I got a thrown in the deep end of the pool education on how is capital raised, how is capital managed for multi-million-dollar projects, mostly in the field of commercial building, commercial real estate. And because the software back then for the CAD software, the architects couldn't 3D animate. So we had to use film software like Lightwave, Softimage, Maya to be able to create these presentations. Those presentations expedited those capital raises, or sometimes it was city approval, sometimes it was raising money for a nonprofit.
Okay.
So this went on for about 10 years of my life, and I actually at 21 started my own company doing it, and did a lot of capital raise that bled into film and media production in general. So I started working in films. Did some independent projects. You could find me on IMDb, see some credits there, and had a lot of fun doing that. And I discovered when you're dealing with capital and dealing with people and making those decisions about capital, their mind is the gatekeeper, but their heart is the decision maker. And a lot of people don't realize that the checkbooks don't come out, whether you're buying your home or whether you're going to buy a business or you're investing into a portfolio. Your heart really has to be on board. You have to want it. So I like to listen to people what they want and say, hey, what do you want? If they know it, if they're communicating to me clearly what they want, then I'm better suited to give them what they want. And that's what made me very efficient at capital campaign, capital raise, and capital management. Well, in 2020, a thing happened and the world decided to shut down. You might have seen it in the news.
Yeah. I've heard of it, yeah.
Well, film and media kind of went and shut down for a hot minute. And I had an opportunity.
What is it that made them shut down? Because I know that a lot of them went offline. They were having trouble getting production out there. Is it just because of the COVID? No one wanted to get around each other? It was just shut down the operation?
I mean, for a short period of time, there was just quarantine. We got to figure out how we're going to do this.
Yeah.
How are we going to continue production?
How to make movies over Zoom.
Right. And so, I mean, I was a guest on a PBS show once, speaking on the subject we're talking about today.
Yeah.
But during the quarantine, and it was a Zoom program. So it was I felt like it was a Brady Bunch show, we're all talking to each other. But
I like this. This is better.
I'm glad we're back to this.
Yes, I'm glad
Thank
we can
God.
sit in front of each other again.
But I was able to pivot, and the pivot relationship, how do you go from film and media to end up in Bitcoin mining? And that is a device called a GPU, a graphic processor unit.
Yeah. GPU is a graphic processor unit.
Yeah. So those are used for 3D animation.
Okay, yes.
But they're also used
Use them on video cards and stuff like that as usually we'll find them, yeah.
Those are used for mining some other cryptocurrencies like Ethereum, proof of work, not Bitcoin, but other cryptocurrencies. And so I had access into this world, and there was this bridge between the equipment that's used in 3D animation and the equipment used in mining. So in that bridge, I was able to kind of dive in and start building mining operations on GPUs.
So you have two things, right? So you were looking at capital investment, raising money, and then you also had the technical side, looking at how they process the cryptocurrency, right? And Bitcoin's an example, but that's how they get back and process it. So you have kind of two things that are really tying you into this. It's kind of interesting that's how you got into it.
I find myself bridging a lot of gaps, and so that
like people probably don't know about one or the other.
Right.
You just happen to know about both.
Yep.
Right.
I'm a unique crossover, a Venn diagram crossover of specific expertises that came together very effectively at that very moment in time. And so being able to dive deep into it, I also discovered this Bitcoin and cryptocurrency mining industry is very young. And not just young as an industry, it's young as the people involved. And they needed a little more infrastructure and more experience. And so I started trying to guide as to my best ability and bringing people in that were saying, I want to come in for $20,000. 2 weeks later, they're putting $400,000 in. And so because they started seeing, okay, there's expertise, there's management, there's administration. Well, that fast forward, we go through a bull market, we're coming into a bear market, we're coming out of the bear market. I meet this gentleman. And when he literally knocked on my office door last September, looking for the expert in the room kind of thing, and learned that he has, and he'll explain all his background. It was a match made in heaven because he had a higher level of high net worth investment experience to take my connections in the Bitcoin and mining world and raise it even to a better, more effective, efficient, more profitable, and most importantly, lower risk.
Yeah, more leverage can create definitely economy of scale.
Yeah.
So a lot of those risk and things start neutralizing when you have enough capital being poured in, right?
But not just capital, having strategic management of said capital.
Gotcha.
And a level of accountability.
Yeah.
It's
one thing to have 1,000 investors, another to be able to manage them and stay in front of them and connect with them and put them all together.
Mm-hmm. And make them feel comfortable and safe. Because comfort and safety doesn't come from me just giving you a good pat on the back.
Sure.
It comes from having very definitive legal processes in place. And that's what Giovanni was able to kind of introduce me to and take me to the next level.
So our connection that we have is through Matt Millard's a good friend of mine, known him for about 30 years. And in the company that he is focused on and promoting is Geodel Mining.
Well, Geodel Syndication.
Syndications.
Yes. But we do mining.
Syndications. That's your connection. That's what you guys are. So I want to make sure I give him a shout out since he's the one that made the connection and got us set up. So how did you actually come across Matt?
Matt was the first investor into the mining operation that I came in to become the new administrator of back in 2019.
So there's some advantages being first. Mm-hmm. Big opportunity there. Definitely. Big advantages. So Matt set himself up nicely for that. And that's amazing. I love that. Let's do this. Anything else you want to share from your background is there any films that you want to drop or anything? Are you allowed to, or are they bleep it out?
No, I can. You mean, Addiction is 60s Love Story. I was a special effects supervisor of, and that went to Cannes Film Festival and won some prizes, sold, and did well. And we did some work with Doctor Who, if you for the nerds out there.
Yes, yeah. There's the telephone booth and question marks.
Yeah. And, you can find me with my TARDIS.
Okay.
In Tulsa. So.
Very cool. Anything else you want to share from your background?
Oh, well, sure other things will come up.
They will. Absolutely. Awesome. Well, let's get a chance to talk with Giovanni. I've watched some of your videos and some of the stuff you've done. You're famous for me. I appreciate getting a chance to sit down and talk with you. And you're mainly, I know you have a background, you were in the military and you've had some other things in your background, but specifically I think would add value is your background in the investment world and working with mutual funds and stuff. I think you were in charge of managing one for your family.
Yes.
And then that turned into you evaluating people and things like that. So I'd like to kind of start with the investment world. What was your role and maybe a little bit of your background with that?
So a little bit about my background. I was born in Paris. I was educated in England. My father's Italian. My mother's American. Okay,
that's hard to follow, but I trust.
So I was born in Paris to an American mother.
Okay.
Right? So even though I was born in France, I am so American, I could become president of the United States of America.
So we'll see about that later.
Right. I don't think anyone would vote for me as president, but I was born an American.
Okay.
So what I say is that I am a mix of both European savoir-faire and American pragmatism, which is a good mix, right? So America's about get to the point, efficiency, and so on and so forth. And Europeans are a little bit more flowery, process orientated, and so on and
Wait
so
and
forth.
watch.
Say it
You
again.
said laissez-faire. So wait and watch, kind of see how things play before you jump in.
No, savoir-faire is different to laissez-faire.
Oh,
so
sorry.
savoir-faire is a certain know-how, a certain style, a certain elegance, right? And Americans are more about, bottom dollar, like
Sure.
get to the point. What's in it for me?
Kind of like what I'm doing with you. Like, let's go.
I guess. So with my fundamental belief is that wealth and health are different, right? You can be born with a lot of health, but whatever you do, you'll lose it over time. And with wealth, you can have so much wealth that the wealth could compound and grow quicker than your family tree grows. So you can manage wealth in such a way that you will never lose wealth over time.
Okay.
That would be like, let's say, the Rothschilds and the Rockefellers and so on and so forth, if their wealth is well managed.
Generational wealth, legacy, these things that could just carry forward.
Right. So within wealthy families, there are service providers, lawyers, accountants, and so on and so forth, who would have you believe, I would say the lunatics are running the asylum, and in this case, it's the lawyers and the accountants. They would have you believe that it is the family that destroys the wealth. And I think it's actually the professionals that destroy the wealth. It is the lawyers, it's the accountants. They drive the wealth to the middle, and that causes the wealth to not be able to outperform the markets and inflation. So given this, my grandparents were very wealthy. And what was reasonable for my mother when she turned 18 was wildly unreasonable for me when I turned 21. She wanted a certain rock band or so on and so forth. And my grandfather tried to get it for her. But when I turned 21, if I had asked my mother, can I please have Wham or Duran Duran or In Excess play at my 21st birthday, my mother would have said, you're a spoilt little brat who doesn't know the value of money. So in one generation, the purchasing power had diminished so significantly. And that's what bothered me, because we were born with a certain set of resources, very, appreciative. I'm lucky for that. But I think it was wasted over time, and the lawyers and accountants would have us believe that it was our fault. And in my opinion, it's their fault, because they didn't outperform the market.
Gotcha.
So my viewpoint is that conservative investing is a way to feel good about underperforming. So when the market does 10% and you do 8%, so you're below average, right? You feel better about being below average by saying you're conservatively invested. And when
Or you didn't lose. And sometimes people think of it that way too. At least I didn't lose. I'm still moving forward.
But sometimes the environment works against you, right? So if you go into what we would call, let's say, a crypto winter or a recession where everything goes down, you blame your loss of purchasing power on the market conditions and not yourself. So if on the way up you underperform and on the way down you lose money like everybody else, over multiple market cycles and generations, you're just eroding wealth. You're just eroding purchasing power. So I went looking for investment opportunities that would significantly outperform. I could make so much returns in a short period of time that it was well worth the risk I was taking for that short period of time, because I don't think that risk and reward are in any way meaningfully correlated. Just because you're making 10% return on investment doesn't mean you're taking a 10% risk. And if you can make more than 100% return on investment, it's worth risking 100% of your capital, though no one would literally invest in something that could cause them to lose all their capital. So there are investments in which you might be willing to lose 20, 30% of your capital, but your upside opportunity is to make more than 100% return
Sure.
investment, in which case that's a good risk reward profile.
For sure.
So given that, that's how I got involved in sort of emerging managers. And when I came to Tulsa, I was buying the dip. I was looking for investment opportunities that would be readily apparent in a recession. So I came to Tulsa in sort of September of 2022, clearly well into the Bitcoin recession, and the Bitcoin winter, and I was looking for a guide, an investment advisor who knew the lay of the land and understand the mechanics of Bitcoin and Bitcoin mining, because why invest in the asset when you can invest in what builds the asset? So it's like, why fish for a fish when you can own the trawler and get tons of fish?
Sure.
So I went looking I decided within the Bitcoin sphere, I wanted to be in the Bitcoin mining sphere sort of world. And to do that, I was looking for a guide and investment advisor. And that would be, let's say, a fund. But given that I'm looking at this from an investor's perspective, not a manager's perspective. As an investor, I'm looking for access to opportunities with the least amount of obligation for me to follow through, right? So in a fund, the investor puts their assets under management. It's money that you give to the fund owes it back to you, but it belongs to the fund now. Whereas within a syndicate, you place your assets available to the pooled investment vehicle, but the investment manager has no control over your assets. They provide the investment opportunities to you, you say yes or no, and so you retain control of your assets until the very last minute. And that's why I'm doing a syndicate structure with Chris. So there we go.
I like that. So I do want to talk. This is something that's kind of fascinating for me, because I know I was watching something where you were describing, you could go to one of the top 5 or 6 players, right, in the investment world, to a hedge fund manager that's had proven success, proven track record. But that wasn't something that you really wanted to look at. You end up in Tulsa, probably not a top 10 financial place in the world, right? I mean, it exists, but you went to a source and you went to a specific place because you saw the risk was low enough and the reward was high enough for a reason. And that was something that you were talking about in a previous podcast that you had done. So talk a little bit about, you could have gone anywhere, right? You could have invested anywhere. You chose Bitcoin. And then not only did you choose Bitcoin, you specifically wanted to go to a specific source as well. And you went to the mining source. Can you talk a little bit about how in the world would you end up going there? And you could have, like I said, you could have picked a fund manager that invests in Bitcoin, right? So you did it yourself.
Right. So the leading indicator was I met a portfolio manager for Bill and Melinda Gates Investments. He then became chief investment officer of another family office, which is the Kaiser Foundation. Mm-hmm. And George Kaiser is someone who essentially picked up the pieces of the wealth that was generated in Tulsa. So our offices are in the Phil Tower. The Phil Tower was Wade Phillips. Wade Phillips is Phillips 66 or ConocoPhillips. And so he was the first wave of oil mining, or oil money. And essentially, George Kaiser is, let's say, the second wave, only lesser known. He actually owns Williams Energy and Bank of Oklahoma, and took Oklahoma out of the doldrums of the 1970s, 1980s. He believes in Tulsa. So when this guy went to Tulsa and became the chief investment officer of the Kaiser Foundation, and they implemented a bunch of programs such as Tulsa Remote, it was attracting a certain type of intellectual capital that was coming to Tulsa. And that's what piqued my interest. A friend of mine moved to Tulsa, who's worked with me. She's like an advisor, an assistant with me. So when she moved to Tulsa, it piqued my interest. And then I came to visit her. And then because of this guy who'd become the chief investment officer at the Kaiser Foundation, that's what brought me from Monaco to America, and within America to Tulsa. Then within Tulsa, I knew that I wanted to do Bitcoin mining, and I wanted to do it off of natural gas. So the mistake that I believe, there's two philosophies to, I'd say, Bitcoin mining, is that you want to mine at scale. And I think the problem with that is that if you're mining at scale, you're building warehouses and, fixed infrastructure. And if the price of energy in that area goes up, which historically it
Directly
hadn't,
affects you.
Exactly, it hurts you. And so I was looking for a cheap mining source, and there's an ESG component to my investment thesis. So because America is an oil country and not a natural gas country, in Europe, we use natural gas for trains, trucks, heating, and so on and so forth. America is really all about oil. It's all about petrol. It's all about diesel. And so in America, when you frack for oil, you get natural gas, and you can't put natural gas into the same pipeline as oil. And so if you don't have a pipeline, you used to just let the gas
Flare it
emit.
off.
No, you used to emit, you just used to let the gas go up.
Burn
like not even burn it.
Yeah.
Just
Release
vent it.
Yeah.
Exactly. And so flaring gas is the driller being environmentally conscious.
Yeah.
Right?
You get both benefits. I love it.
So then what happened is that the federal government created a program called the Inflation Reduction Act. And that Inflation Reduction Act essentially recognizes that penalizing people for environmental damage wasn't achieving the desired results, which was preventing environmental damage. So with the Inflation Reduction Act, they put in a program where we'll pay you, not we will penalize you for damaging the environment, but we will pay you, given that you're an oil driller and being environmentally conscious is not your core business model, we'll pay you to, be less destructive to the environment. And so I thought, perfect, I'll take this stranded gas or this flared gas, I will turn it into energy, and I'll mine Bitcoin on it. So I will have, in my opinion, a lower cost of power, but I won't achieve scale. I won't be able to have 500 megawatts.
There's only
of
so much you
energy
can do with what's available to
at a well.
Yeah.
So I'll have to have lots of small wells, and I think that we'll achieve mining profitability by lower energy as opposed to larger scale. So I was, zigging when they were zagging. I was in crypto. I was doing the crazy Ivan, to hunt for Red October. I was doing the crazy Ivan, and that's my investment thesis is if you do what everyone else is doing, you'll get everyone else's results. And I'm willing to go do something that I think is relatively similar, but distinctly different. That's my investment thesis.
I love it. So we're going to pick up with that a little bit later. I want to come back to Chris and get a little bit more technical, just for the general audience that's investing and looking for opportunities. What is Bitcoin mining in just a very easy, concise way of thinking about it?
Sure. So Bitcoin mining, there's literally people who've questioned whether or not we are digging in the ground and mining Bitcoin. Bitcoin is in a clouded space. It's in a data space. And the mining is just because its closest comparison is for mining gold. So these are computers called ASICs. They're machines that are strictly designed to manage the blockchain, to protect it. And those machines are rewarded in newly minted Bitcoin for doing so. So these machines, each one machine can use as much power as a house. So very power hungry, and they are computing over and over and over again, hundreds of thousands of times in a second. These processes are run, and this algorithm is run, the SHA-256 algorithm. I'm going high level in a very rapid pace here. So if you want more detail, find me online. I'll give you more detail. So
Sure, you can get very technical.
yes. So, but these machines, we have thousands of these machines at one location, so it's using multiple megawatts of power. But there's millions of machines all over the world doing this. So it is keeping Bitcoin safe, because you have to hack all these machines to be able to steal or corrode Bitcoin.
It's not centralized,
Right.
which is a big thing with risk, right? It's not centralized,
Yep.
and no country owns it, or controls it. So it kind of has this decentralization. I like that.
The decentralization is 100%. So proof of work is what we're doing. We have machines doing work using energy. So imagine this currency is backed by energy. So we had the US dollar used to be backed by gold. And now we have this other thing called Bitcoin, and it's backed by energy. Energy is finite. We have to work to create it or find it. And in that,
Or in his scenario, have the government pay us to go get it.
well, that's the genius of what Giovanni's putting together here in his strategy. So these machines have to be constantly on, but there's other advantages these machines have. They can be turned off intermittently in different locations. So we can choose to be less of a strain on a grid network where no other kind of
Gotcha.
company can just say, oh, turn off for 1 hour. And these peak hours that stress the grid during a hot day in the summer
Sure.
in Dallas,
Or
Fort
during
Worth.
our freeze, where we had the massive freeze, we could probably curb the energy consumption to make sure we take care of people.
Oh, there were several mining operations that were several hundred megawatts that turned off the entire time. They said, "Hey, we're not going to stress you out
Is
at
that
all."
not wouldn't they not have a competing interest at losing profitability or opportunity to build, or is there something more that turning it off is an okay, acceptable thing to do?
Most energy sources provide what they call curtailment programs. Say, if you agree to turn off up to 4% or 5% of the year,
Gotcha.
so there's 8,000.
They give you some type of benefit.
Right.
What do they do?
And they don't pay you
Gotcha.
in advance. So they're hedging against themselves, saying these guys are going to turn off.
It's not realistic to run them 100% full capacity 24/7 all year long. So we'll offer some type of curtailment option.
on the hours that cost them 10 to 100 times more. So
Okay.
they go, it's going to cost, this 1 hour is going to cost us maybe 30 times as much as normally, the power, the utility.
Gotcha.
And we're going to pay you a premium for turning off that hour. So we don't have to go buy this extra expensive power for you. So they're literally hedging against
Interesting.
themselves.
So at time of maximum energy production is making it more expensive and less cost effective to do it, right?
Technically, yes. So what they do is normally you might, your home be being
So turning
charged.
it down can help everybody in that sense.
Yeah, absolutely. It's a win-win-win.
So you get a little bit of benefit, not running it, maybe not make as much total production, but you make a curtailment, and then it's not challenging the grid, the grid, and we're not paying the maximum cost for the energy. I like that.
Because your cost at home is averaged. So they take all the peaks you might have and on the normal valleys and they average that price. We're going to do the same thing, but we chop off the peaks. So our rates drop. So you might be paying 10 cents a kilowatt hour and we go on a grid and pay 4.2. So because of that,
Yeah.
we're able to be very profitable even on a grid. So the reason we want to go to natural gas is not only is it off grid, but we can feed power back to the grid. We can become actually a contributor to said grid. It also has an ESG element because we can actually do flare gas mitigation, start saving the earth. So when I go to a hedge fund conference and talk to investors, I say, I'm Captain Planet and I'm saving the earth and getting paid to do it. So that's kind of the opening moment is this has helps the grid, helps the populace, helps the earth. And in the meantime, we're creating a store of value called Bitcoin through these machines. That's what mining is all about. Now, as far as the investment's concerned, this investment is really an energy play and a real estate play. Mm-hmm. When you're mining, the machines themselves, a lot of people are sitting on hundreds, if not thousands of them in a warehouse because they don't have a place to plug them in. You have to have a lot of power. You have to have very specific power. You have to have ventilation because each machine generates more heat than a hairdryer. So they're loud. And so you go, okay.
That's why electronic mainframes and stuff like that are in cold rooms because they burn a lot of energy.
And ours, we just need to vent the air. We don't care as long as the air is above or below 95 degrees. We just got to get it in and get it out. So facilities have to be custom designed for mining, and there's not enough facilities in America right now for all the miners in America right now, all the machines. So
you have an infrastructure building plan to help offset that deficiency, right? That's
Yes.
one of your core things you're looking to build.
we have it's two hands. We have one hand is going to be the energy play. That's going to be buying natural gas, buying generators, producing electricity from that natural gas at a very low rate, reducing flare gas mitigation, and selling that power to the other hand. That's going to be a building infrastructure. So this is energy play. This is real estate. Our tenants are not people. Our tenants are machines.
Let's think of it from a big scale, right? So we have gas being, obviously we're an energy heavy state, Texas, right? You guys are here for a reason.
Yeah.
We're an energy heavy state. So what is you see as the opportunity for this this building mines? How much opportunity is there in the U.S.? Is there I mean, I know you're looking at it like it's enormous, but I don't know what's the relativity. Are we at 1% and we got 99% more to go in order to be able to facilitate?
The
How do you kind
demand-
of like equate that?
The demand organically is increasing by 3% a month. Okay, so the number of machines that are being manufactured and need to be put online is approximately 3% a month.
Okay.
So that's without the just already existing overabundance of machines in warehouses. So just new manufactured machines coming into the market and the system needing them to be plugged in. That's that 3% growth. How many machines are sitting out in warehouses? Probably a gigawatt, just waiting to be plugged in.
Not even being utilized.
There is more energy than there is capacity to use it within Bitcoin mining. And so
Today, probably for a long time.
for a long time,
yeah.
for a very long time. So it's that inefficiency, right? So the way regulation is going, energy providers in America, at least in Texas, with respects to investments, have been fooled by the randomness of the regulatory environment. I don't think that drillers and well operators in America, I think they underappreciate the teeth of the EPA. So under the Trump administration, the EPA was run by an energy lobbyist, and so he retracted the teeth of the EPA. That has lulled, I think, well operators in Texas to think that the federal government doesn't have any teeth. Under the Biden administration, the EPA's fangs have come out.
Yeah. They're more focused on environmental stuff, for sure.
Right, as they would have been in the first place.
Yeah.
But with the Inflation Reduction Act, there is also a buffer to those fangs. Now, don't abide by the direction that your nation wants to go in, which is mitigate environmental impact. And those fangs, when the federal government sinks its teeth into you, if it doesn't take a pound of flesh, it'll kill you. And so the opportunity that exists right now with well operators is that they act like they're in the driver's seat because they're providing energy. I think they're massively overplaying their hand with respects to energy. We provide the biggest risk to well operator right now is not operating environmentally, in my opinion. Okay, it's not the price of energy, it's not oil, it's the environmental impact you have. So if you now focus on the environmental impact and the natural gas that you are creating, if you can't put it into a pipe, there's many well operators that can put that natural gas into a pipe. But if you want to drill a new well and you have nowhere to put that natural gas, you won't get the right to drill a new well. And if you have been drilling a well and been flaring gas and you've been paying penalties for a year or 2 or 3, if you become a chronic penalty payer for these environments, I believe that the EPA will shut you down for being chronically paying. Those well operators are operating as if paying the penalty is just a cost of doing business.
Correct.
And I don't think that's going to be the future.
Yeah.
I think that the EPA is going to crush them.
Gotcha.
And the result, so what we're offering is the opportunity for you to drill for your oil, get your oil, and we'll deal with your natural gas. But still, there is more natural gas than there are miners or data centers. So we really are in the driver's seat. I see energy prices for Bitcoin mining remaining very competitive, very, very, very low, which means that mining Bitcoin, the natural resource that generates the Bitcoin, the energy, that spread, I see demand for Bitcoin going up, whilst the price for the energy that creates the Bitcoin remaining relatively low. And that spread, as Bitcoin gets more and more adopted, and people miss out and FOMO and chase after the returns they haven't achieved, as every industry matures, right? It becomes more stable, it becomes more credible. There's less sort of, energy cowboys or so on and so forth. The birth of the energy industry, like in the movie, what's it called? There Will Be Blood, right? That kind of oil operator doesn't exist today. There is no Spindletop. There is no Gusher. So as an industry matures, which is what the Bitcoin industry is doing over the last 14, 15 years, but really the last sort of 7 or 8 years, and definitely the last 3 or 4 years, as this industry matures, the credibility of Bitcoin will only increase. Thus, the demand for Bitcoin will only increase. And that energy discrepancy, that spread is in the favor of the Bitcoin miner, unfortunately, not the well operator. And that's why I, as an investor, am focusing on this space, because I see that spread. You don't have to be a Bitcoin maximalist. You don't have to, believe that the American dollar is going to collapse. As an investor, all you have to believe is in that spread. I think that spread is going to widen, and that's the inefficiency that I'm exploiting. That's why I'm here.
Gotcha. I like that. I'm thinking, I do like that analogy, the way you kind of describe the EPA and the way the EPA can actually, it's going to hurt a lot of the people that are out there, and you have the opportunity to say, no, we can make it work for you. Mm-hmm. You don't have to lose money. You don't have to be, behind the crosshairs of the EPA. So I was thinking about, on my way home, stopping by Best Buy, getting a computer and starting up my own Bitcoin operation. Is that how we get into Bitcoin?
Not anymore.
Okay. Well, that was, it's funny. I was talking to Matt offline, and we were talking about, like, way back, I worked for a corporation, and one of the CFOs, he created a lab of all these computers, and it was processing all this data, and I didn't know what he was doing. But I think that was like kind of early stages of, breaking down and processing information in order to create cryptocurrency of some sort. It was like, I don't know what you're doing. It doesn't make any sense to me. But I think that was kind of like the early days. So I don't think that's the way we do it today. Probably not going to generate very much money. And maybe over 10 years, you might make a few bucks, but.
So you have to operate.
The question is, how do we get into Bitcoin mining? That's really kind of where I'm looking for.
If an individual wants to get into Bitcoin mining just to dabble, it's very difficult because it's a high entry level cost. One machine, right now in the bear market, one machine is about $2,500.
Okay.
I've seen the machines go as much as $16,000. And the price of those machines curtail to the productivity and the value of Bitcoin and the profitability of mining it. All of those things impact the price. So the price follows the curve, and because it's a supply and demand. When it's very profitable, there's a higher demand, and the supply hasn't changed. So the price goes up. So entering into Bitcoin mining, you're going to want to say, okay, I'm going to buy some Bitcoin miners. All right, well, let's say they're 2,500. This is a good time. It's a bear market, good time. Buy low, sell high, right? So I'm going to buy 10 of them. So I'm going to spend $25,000. Now I'm going to go put them somewhere. So you go through all the list of hosting options out there. We're one of the hosting options. And every hosting scenario has different pros and cons. You want to go on grid, you want to go off grid. You want to, go to a 1-year contract or a 3-year contract. And then those that have deposits. Well, typically deposit is about 2 or 3 months of the service fees. It's kind of a security deposit, just like any other kind of lease. You're going to be a tenant in the building. You're going to put machines in the building. You're going to plug it in. You're going to have some common area maintenance. Some CAM charges. I'm using the language that most people hear about. Same concept here. So these machines, and you're going to go plug them in, and then you're going to put this pretty decent deposit down, and then you're going to be getting Bitcoin into a wallet. So your wallet's going to start seeing that grow. Well, you're going to have to sell some of that to pay your bill to that hosting facility every month. Some of those facilities will say, hey, we're going to actually pull some Bitcoin out
as your fee.
As your fee.
Yeah.
So you don't have to do that. It depends on each location, has different rules.
I like that strategy, taking a little piece of everyone's money. I like that.
I would say there's 2 types of ways of getting in. He's talking about the retail way.
Yeah.
To put it into perspective, right?
I was going to get to the,
okay.
yeah. So you can see how it gets expensive, it gets cumbersome and all that. I said, however, the other way is to become a Bitcoin mining investor. Okay, you can come in and say, instead of me essentially building my own business out of my savings, you can take and join us, like our syndication, for instance, manages new members into, now you own a piece of a mining operation. And you become part of a group that says, okay, I might own a hosting facility, or I might own our own Bitcoin miners and a hosting facility, or a hybrid of the two. Every SPV, special project vehicle, that's created for each location has different ground rules for your participation. And the syndicate members can literally choose, I want to be a part of that one, not that one, and that one. Because it's like going into an arcade back in the day. I'm not sure if young people actually have been into an arcade.
Oh, sure.
But you go and you put your $5 in, you get these tokens out. You get quarters, you get tokens, and you can go spend the tokens in the games. When you join a syndication, you bring your letter of credit, you bring your finances to the table, and now you can go, I want to put my tokens over here, and I'm gonna play this game. And so there's options, and that's what Giovanni's brilliance has been able to construct. Is
taking the current plan and making it even more efficient, and taking opportunities that created from environmental, there's excess of this, we can take that, we can make and turn that and make it even more profitable on the mining side. So he's really getting into the mining side, which is, I know most Bitcoin investors probably don't look as much on that side. They look more on buying Bitcoin and trading and things like that.
I'm going to make an analogy for your real estate investment.
Yeah, I was going to ask you about the commercial analogy.
Well, I'm talking about house flipping, which is more in your space.
Sure. Yeah.
Okay. If you take a home that is for sale for $1 million, but the comps in the area make that house $1,250,000, right? So let's say it's in a planned community. The reason why your home is for sale at 20% below comps is because the guy's lived in that home for 30 years and has never renovated. So imagine you are a house flipper, you have good credit with the bank funds you to give you mortgages and so on and so forth. You put $100,000 deposit down on the home. The bank comes along and gives the guy who owns the home $1 million. The guy walks away. You take your $100,000 back and you spend $100,000 in renovations, and then you list 2-3 months later, you list the house for sale as a flip for $1,250,000. You make $150,000 profit. Most people would say that they made $150,000 profit on a $100,000 renovation, and not that they made a $150,000 profit on a $1 million home.
Gotcha.
Okay. So the key is to find a way to get the bank to give you the $1 million. And the bank loves real estate. So my innovation is I have a strategy, a structure that allows for the bank to view this investment as safe, like it's real estate, only it's not.
To maximize your leverage with the minimum amount of cash invested.
Leverage is a catch-all word, right? So it's like cholesterol. You have good cholesterol and bad cholesterol. So with leverage, one would say you're using leverage to buy a home, but I wouldn't say that that's bad leverage. Using borrowed money to buy a real asset with seemingly low volatility and the ability to create capital improvements that increase value to the asset, and you can make that spread
is a safe
investment.
Sure.
So what I'm essentially doing is applying a safe investment strategy to an asset class that's perceived as risky, right? So that's where my risk and reward are no way meaningfully correlated. Because Bitcoin is seemingly risky, there is no way for the investor to say, I'm going to invest in your deal, but so let's say Chris can't say, because I come to him and I say, okay, I'm going to invest in your deals. Chris can't say, this is a safe investment, so I'm not going to give you a risk premium. We agree that Bitcoin is risky, so he has to give me a risk premium. And that is where I make my money, because he can't crush down my profits because it's considered risky. Whereas if I was to go do a real estate investment, it's considered safe, so the investor can't extract much of a risk premium. So as it relates to this, you can either be, what's the name of that pastor who's against debt and so on and so forth?
Oh, like Dave Ramsey.
Dave Ramsey. Dave Ramsey,
Yep.
Okay? The devil's in the details, the exception that makes the rule. Generally speaking, for retail people, debt is bad. But if you can if you can, instead of you being a slave to the bank, if you can make the bank not necessarily a slave to you, but if you can make the bank service your needs, right, then you are leveraging the bank. And that's what we're doing here. There is a way, if you join the syndicate, you have to, unfortunately, it's a double-edged sword, right? The regulations are there to protect unsuspecting retail investors. One could also look at those regulations and say it is there to allow great investment opportunities to be limited only to wealthy people. So wealthy people get wealthier because they have access to investment opportunities that the retail investor doesn't have.
Accredited investors.
Accredited, right. So if you can be an accredited, sophisticated investor, if you qualify as one of those, then you can join the syndicate, and literally you will get paid in increments. You will get paid as a percentage of $1 million, when in reality, you're not putting up $1 million, you're only putting up $100,000.
Gotcha.
And that is just like house flipping $1 million home with $100,000 in renovations. That's a very attractive way to invest in real estate, flipping homes. When you flip homes, though, it is also time intensive for the flipper, and that's why there are some flipping funds, but they're also, dependent on the flipper. There's a lot of management issues and so on and so forth. So if you can create a fund that is professionally managed, with as fund manager, a fund administrator, a fund auditor, that's what our syndicate has. It has these service providers, these outside independent groups that service the fund and allow for the investor to say, okay, I'm not investing in a garage band, right? I'm not investing in a small podunk investment, even though it's relatively small. You're getting this professional services that surround the investment opportunity, that justify, certify, verify that those performances are in fact real and achievable, and that your money won't be misappropriated, no fraud, no nothing. Now, one last point. I also think that failure is often confused with fraud. When people fail, the victims of that failure go, oh, there was fraud involved.
Yeah, who's at fault? Yeah. Or fraud. Yeah.
Fraud.
They were deceiving you.
Right. We believed it was going to work out. It didn't work out. And suddenly we ascribe some sort of fraud to it. And so, I think that, there's a very famous video of Bernie Madoff, twiddling his thumbs, saying, in the current regulatory environment, a rules infraction is virtually impossible to go unnoticed. That's true. But when a regulator looks at Bernie Madoff, he looks like at a bastion of finance and dares not speak truth to power, dares not say the emperor has no clothes, right? So generally speaking, regulators do protect investors. It's such that when there is when there's an imbalance of power, when the regulator isn't more credible than the investment manager, but the investment manager is more credible and more powerful than the regulator, that's when the regulator cowers. So in most investment opportunities, investors can feel safe in those investment opportunities as long as those investment opportunities are well structured with outside service providers. I'll give you one quick example, right? I love KPMG and all auditors and so on and so forth. Essentially what they're doing is for a small fee, for a service fee, they're selling you their credibility.
Yeah,
they're putting their credibility on the line.
Yeah.
And that is why I think that my goal in this conversation is to inspire investors to want and achieve more returns for their investment. Dare to demand more returns for your investments, but do it in such a way that you're investing in investments and investments that have a good structure around them. There are iron sharpens iron, not that it's my investment, I'm the auditor, I'm the administrator, I'm the advisor, it's all
Control
me.
it all, yeah.
There we go.
Yeah.
So that's
A couple points I want to kind of run through and make sure I understand, because you're at another level in some of this stuff. I'm trying to make sure I get it. So we've got accredited investors, kind of like the opportunity to open the door,
Right.
And you're saying, okay, well, you have $1 million in assets or whatever the minimum criteria is. I don't need $1 million, but I can take 100,000 and I can make it as worth as much as something else because yes, that's what you're basically showing. I'm giving you the value of what you're worth, but I don't need all of it.
Right.
And you
That's
get
incredibly powerful.
the deposit back quickly.
And you talked about that as well. So we put up the 100,000. There's a way for you to actually get the 100,000 back.
It's going to be distributed first in the SPV. So
your investment's paid back. Oh wow! I mean, you're at 100% already. Anything beyond that, you're making money.
Yeah.
You're
not making money off of your cash investment anymore. You're making money off of your credit capacity.
Your credibility. You're a accredited investor. You get the benefit of that, and that's the way. So why would you not, just sake of argument, why not take the mom and pop that's got a couple 100,000 in the bank account and they say, hey, I want to jump in and invest in this. I'm just asking. Why wouldn't you work with them? Is it just because that now you have an additional level of liability working with them, or
that's not for neither Chris nor myself to say yes or no to. There's an administrator, which would be Altanad, and Altanad essentially says whether the investor is qualified or not.
they're the gatekeeper?
Right. There's something interesting going on in the investment community, which is that I think that the investors and the managers are both going in the same direction, which is, to have a very skeptical point of view, investors are saying, I would rather lose my money myself than give you my money and you lose it for me, right? And managers are saying, we would rather you lose your money yourself than you give us your money and we lose it for you. Because if the investor invests in a manager and the investment goes well, the investor says, you see how smart I am? Mm-hmm. And when the investor makes an investment and the investment doesn't go well, the investor says, how stupid you are, right? So essentially on the sell side of the investment community, so like your Ameritrade, Schwab, whatever, what they're saying is, we'd rather you lose your money via us. We will service it, right? You take responsibility for your investments. So the beauty about a syndicate is that there is a structure and the investment advisor and the lead syndicate. So I'm the first person to drink the Kool-Aid. And if I don't die, there's no hemlock in there. Then other investors, other syndicate members can say, okay, I'll join you, right? So the risk for a manager is a disgruntled customer, like hell hath no fury, like a woman scorned, right? Hell hath no fury like an investor scorned, because they can denounce you, they can put drop a dime to the SEC, and just the regulators doing an audit on you, I mean, like the IRS, is something you want to avoid. So investment managers, generally speaking, which is like 98% of them, right? People looking for your investment, if they're in a structured investment product, they're taking on a lot of liability, a lot of risk that they piss off the investor. The investor drops a dime because, pain is pain, and whether it's true, justified or not. If the investor complains to the regulators are they'll go and regulate, right? And they'll cause trouble for the investment manager. So as it relates to what we're talking about here, the reason why that mom and pop, if they can't qualify, then the investment manager won't accept them. Now, there are retail products that, crowdfunding and so on and so forth, but the less regulation you get within your investment, I'll give you a quick example, FTX, right? You can't invest in crypto because you like that the federal government can't regulate it, can't control it. It isn't centralized, right? Lose money in crypto and then complain to the government that they didn't regulate it. So pick your pony. Either you like that the government can't regulate it and can't control it, of which take the good with the bad, or you like that the government and the syndicate is, in my opinion, that happy balance, right? You're accessing the asset that is that is seemingly unregulated, right? But you're accessing it in a very regulated manner because it is domiciled within the US. And the US is very regulated. I mean, there are countries in the world in which they say you can't sell medicine in our country unless it's past the FDA. So those countries say, we're not going to create our own regulatory environment. We're just going to use America's.
Yeah.
So if it's accepted in America, we'll passport it over here and you can use it in elsewhere. I'll end with one last point because we are in Texas, right? I think that the people who hate and undermine America the most are Americans. I think we as Americans benefit from that regulation, that central government, and so on and so forth. And so, first of all, there's not much that Americans can do about the regulation. There's very little that they can do. I mean, they can vote politicians into office that can lower regulation, but those regulations really do protect investors. And America has the best regulators in the world. You don't tilt at windmills. Don't fight the forces. Use them to your advantage. Here in America, as long as the investment is regulated, here in America, you can rely on the regulatory environment. Just pick within those regulated investments an investment that, in my opinion, has the highest return on investment. Don't just go for the highest return on investment. Understand that there's volatility to it. And what I like about our investment is that if you buy Bitcoin itself, it's volatile. If you invest in the Bitcoin miner, it's a servicer. Regardless of the price of Bitcoin, the Bitcoin miner is making money out of the energy, not necessarily out of Bitcoin. Now, if you want to go a little bit more risky and you want to own Bitcoin, then yes, invest in the syndicate and own your own miners. Own your own Bitcoin. But in this syndicate, we're making money really out of the production of Bitcoin, regardless of the value of Bitcoin. And at this point, given the 3 or 4 winter cycles, the 3 or 4 cycles that Bitcoin has had, where Bitcoin in the last cycle, not this present cycle, the last cycle, Bitcoin decreased in value by 85%. Mm-hmm. And in this cycle, it's decreased by 75% or something. If Bitcoin hasn't gone to zip with that kind of volatility, it shows you that Bitcoin's like a commodity. There is an intrinsic value to it, and it is not like equities. It's not like stocks. It can't go to zero. In my opinion, it can. It's not an absolute statement. It can go to zero, but it is so unlikely. It's so infinitesimally unlikely to go to zero that you can almost, in my opinion, I'm taking it to the bank. Investors can almost take it to the bank that Bitcoin won't go to zip. That's my belief. You don't have to believe it, but that's my belief.
Do you feel that the government should have more or less regulation in Bitcoin, or zero regulation? Just
definitely not zero regulation, because I think, in my opinion, regulation inspires confidence. And that's what I was talking about.
The insurance policy kind of deal.
Right. Yeah. I think that Americans are undermining America. It's not Islam that's undermining America. It's Americans who are undermining America because they're chipping away. Americans are bored on third base and think that they hit themselves a home run. They're underappreciating how America, by being born and raised and educated and launching a business in America, you are launching in an environment in which there's so much credibility. You're launching from solid foundation, right? There is no way that we would have Google and Microsoft and so on and so forth if it wasn't for the fact that Al Gore funded the internet back in the 1980s. He didn't invent the internet, but he is the...
Which is a funny statement he says.
Yeah. Right. He said he's the father of the internet, right?
Okay.
And in my opinion, he is the father of the internet. He funded a pork barrel spending program that I believe, I'm almost certain, had no benefit to his constituency, because in those days, the research universities, none of them were in Tennessee, okay? So it's by funding the internet, we have Google in America, and if had America not funded the internet, it is very probable that the internet would have been founded in India or Russia. And it's because America, and this is what I think, what makes America great, it's that America can waste more money than any other country can save. And it's in our wasteful spending, like going to the moon, that we have the Teflon nonstick pan and the Tempur-Pedic bed, the ancillary results of our America's wasteful spending translates into commerce that just catapults America. And I'll give you a quick example, right? China banned Bitcoin mining. America was the biggest beneficiary of it. Those Bitcoin miners all moved to America. Okay? So at first they went to China because of the low regulation, seemingly the low energy costs. It's where miners were being built. But when China shot itself in the foot with that regulation, America was the biggest beneficiary. So those people came to America because they liked the stability of the legal system, respect for,
even if it costs
property
more,
rights.
higher barrier to entry, even all those things, you still have some stability.
There we go.
Yeah,
Respect for property rights and so on and so forth.
Go ahead.
Addressing the concept of regulation, I'm with Giovanni. Regulation is a balance. Okay, you can't have too much, and you can have too little.
If anything, sure, you can have too much and too little for sure.
Right now, we are witnessing companies like FTX, and there's several others prior to that didn't get the same news press that wouldn't have happened with proper observation and regulation. Now, the question is, how can you programmatically regulate something that's unregulatable? You do it through incentivizing. So much like the EPA said, okay, we're penalizing these flare gas operators, and they're just making it part of their OPEX.
They're making a profit decision.
Yeah. So we got to come up with some way. You can win people over with honey more than you can with vinegar.
100%.
So I am actively involved with the legislative direction for Bitcoin in my state. I represent Oklahoma in the United States Blockchain Coalition. The Texas Blockchain Council is the most prominent member of the USBC, United States Blockchain Coalition. And so we have everyone's essentially watching Texas and learning from Texas. Texas is now the leader in the legislative direction on how to handle this. And where we're going now is, instead of regulating Bitcoin, we go, let's make energy and the focus, and mining the focus. So Lee Bradsher of the Texas Blockchain Council has bills right now getting passed and entered that have no mention Bitcoin at all. Don't mention blockchain, don't mention cryptocurrency. They're focused on things like, if you have stranded energy, we won't tax you as a state for converting that into electricity or transporting it. Well, that can apply to anybody for anything. The number one application, Bitcoin mining. So we can create opportunities for regulation, for responsibility, for accountability through reward. Another example is finding good tax companies to say, hey, we're going to opt in to being very transparent about our taxation and doing intentional audits of our operation. But we want the government to reward us for this righteous act, because it is impossible to completely audit and regulate Bitcoin intentionally. But if someone opts in for doing something that we think is a sign of good character, there should be a reward system put in place. But there's not currently. So this is part of the process.
So you get a part in shaping the regulation going forward, right? In order to have a platform to build.
So I
love it.
I meet every month with the U.S. Blockchain Coalition, and the Midwest right now, thanks to Texas mostly, but has a lot of focus, because Oklahoma is another energy state that you have 45% wind. We have 10% hydro, incredible hydro opportunities, but unfortunately, ironically, they're more regulated in ways that need to be resolved than Texas is, and so it's causing some hiccups. However, it's still a good state for energy. And in the national, if you look at the national picture, the coasts are super expensive in energy, and they're suffering. So the Midwest is now becoming kind of this capital of Bitcoin mining and energy resolve. because the whole energy crisis, energy issue can be resolved very easily if they listen to the right people and look at newer opportunities. Don't go by the old ways, but go by some new ideas.
I want to thank you for that. I think that really helps kind of put things in perspective, right, on where the opportunity is and that we're going to continue to grow. I wanted to share a little bit back something that Giovanni was talking about it's weird. I've had this conversation on podcasts before. I look at America as kind of this denigrating pride issue, right? So we have this so when I was growing up, we had a lot of American pride. We would stand for the anthem. We would be, you would cry if you heard it. I mean, it was just such energy and we loved it. And I feel like over the last 10, 20 years, it's really got this recessive thing. You talked a little bit about being born into it without a lot of the pressure and stress that we had maybe early on. And now it's kind of like, well, we have it. So, and they think other places in the world are better and things like that. It's really sad. I hate to see that.
Let me disavow you of that, okay? I lived in London in a borough called South Kensington and Chelsea. As a kid, if I told my mother or father that I wanted to go to a football game in England, my mother would not be exaggerating in thinking that I literally could die. So soccer hooliganism in England was so bad that club soccer, teams, not national teams were not allowed to travel abroad to play soccer. And the rare instances when they could, the fans were not allowed to travel abroad to watch the game abroad. Europe struggled with communism in a way that America can't even understand. In Germany, we had the Baader-Meinhof. In Italy, there was the Brigati Rossi. Communism was a serious threat in Europe because it was so close to, Germany, West Germany, Berlin, and so on and so forth. America is incredibly safe, and the social ills, granted, Europe didn't have the Crips and the Bloods and so on and so forth, but there were social ills. For instance, we were at a hotel last night in which these workers from windmills from England were attending. I don't think there was a single English person sitting around that fire who wasn't seriously drunk, almost shit-faced. You don't see that within America. Americans don't chill out by the fire on a regular night getting totally drunk. So the social ills that Europe has, America does not have, okay? So now, unfortunately, I'm sorry, most Republicans are snowflakes. They can't handle criticism. Criticizing your nation is wishing to better your nation. How we can do it better. So criticizing your nation does not mean you're unpatriotic. It means you wish America were better. So the criticism that conservatives hear from the left, they view it as unpatriotic. And the resistance to that criticism that the right has, the left views as insensitivity, an unwillingness to change. So the left is seeking to change. In my perspective, we have a very different perspective.
No,
okay?
And there's a lot of what you're saying. I can
colors,
relate, right? No,
Exactly.
I can relate to it.
But I don't want you to think Americans. You can have toxic patriotism. And I would say an unflinching, undying, uncritical view of your nation is toxic patriotism. Standing for the flag and the origins of kneeling during the national anthem came from the fact that originally there was one African-American football player. I don't know if it was in San Francisco, but whatever. There was
Colin Kaepernick.
I don't think it was him.
I think it was someone else prior to that.
He wouldn't stand for the flag. He would sit on the bench,
Yep.
right? And so some famous special forces guy knew a football player, and the special forces guy said, "Why don't you kneel?" So the origins of kneeling for the flag was a way for those people who would not stand for the flag to show respect for the nation whilst protesting that the nation was imperfect. So kneeling is a respect is a respectful form of protest, whereas originally this guy just wouldn't stand up. He was just sitting on the bench. So, I want you to understand that I'm not unpatriotic. I love this country. One last crazy story. My mother loves America. She's an American citizen by birth. My mother loves America, loves the flag, to the point where she flew the flag, which is unusual in Europe. For any English people don't fly the British flag in front of their houses. My mother put a flagpole in front of her house in the middle of London. It's like having a flagpole in front of your house in the middle of Dallas. Like, people don't have flagpoles in front of their houses in urban cities. My mother had a flagpole built in front of her home in London and flew the American flag, and neighbors thought that it was the ambassador's residence or the consul's residence. They literally thought it was the official residence of an American diplomat. And it was just my mother being patriotic, loving the flag, right? So I want you to understand that you can love your nation and criticize your nation and not be unpatriotic.
Sure.
And a crazy, last point. God in the Pledge of Allegiance was only put into the Pledge of Allegiance. It wasn't originally part of the Pledge of Allegiance. It was only put into the Pledge of Allegiance to root out communism after the Second World War, because communists were atheists. They believed in the corrupting influence of religion. That was their belief. I'm not saying it's true or not. I don't want to be, I know your podcast listeners are probably Republican and conservative. I am not saying that religion is a corrupting influence, but what I'm saying is that many things that the right, conservative, capitalists assume to be true is not quite true. It's rooted in the truth, but it's not. We're misinterpreting the facts.
The devil's in the details.
The devil is in the details, yes. Exactly.
And I also want to echo something. Jordan Peterson, one of my favorite speakers, he actually wears jackets that are blue and red on both sides. And he had a great example. He said, we have to have progressives. We have to have the left because they come up with the new ideas. And, he goes, 9 out of 10 of them might be crap ideas. But that one idea that was really amazing, we needed that idea. And we also need the conservatives. We need the people that are founded in the traditions, because many things are good the way they are. We need somebody to stand up for those. So we need to represent new ideas while simultaneously holding true to things we know are true. But he mentioned iron sharpens iron. And the more you deal with investing into high net worth programs, the more you realize you have to have multiple perspectives. If you don't, you end up essentially getting rid of the waves you're riding on your surfboard. And so I grew up in South Florida, so not everybody understands surf analogies, but you don't literally get on the wave. You don't start there. You swim out into the calm water, look for the wave, wait for the wave, turn around, start paddling as fast as you can to be moving when the wave hits you. Investing is the same way. Okay, so our syndication, we want to get everybody out there waiting for the wave together. Mm-hmm. And then they can say, all right, Sean, you take that wave. I'm going to sit that wave out. I'm not ready for that wave. Or you say, we're going to both hop on that wave. Either way, if you don't have a certain level of volatility, you're just going to be all sitting on your surfboards waiting for a wave. The difference of opinions is part of that volatility. For instance, like arbitrage. If you're going to arbitrage risk, that means I have a lower risk. I want to somehow lower my risk. How you can sell your risk. There's ways to hedge against risk, and what you're doing, you're selling to someone who has a lower risk tolerance or higher risk tolerance. Excuse me. So you have two people with completely different opinions investing in the same thing. But this one got what he wanted because he wanted lower risk, and this one got what he wanted because he wanted higher return. Not necessarily tethered, but in this case, when you're doing the arbitrage and hedging, you can have two different opinions win because they both are in the room at the same time. And that's working with Giovanni. I've learned it is very important to have iron sharpening iron. It's very important to have difference of opinions with investments, especially if we want to take an industry like the Bitcoin mining world and mature it and bring it to a new level. Because if you go into a room full of Bitcoiners, they're all in agreement. They might be arguing over, do I think the bear market will last this long? Or do I think that, Bitcoin is going to be 100,000 or 1 million? But the reality is they're all preaching the choir. They're in the choir. Okay, we need to bring in other perspectives. And within the syndication, every syndicate member is an expert in their field, and they bring that to the pool. So the syndicate becomes smarter with every new member.
Very good. I like it. So we're going to be in closing. We're coming up to the end of our time. And I wanted to give you guys a chance. Is there an event or something that's coming up that you'd like to promote or share that maybe people can connect with? You don't have to have anything like in the next week or two, because we can just talk about where they can connect with you. But
I mean, they can, there's something I want to say, but I'm just trying to figure out how much I can say about it.
give it a highlight. What city? What area? What time?
Well, so as you're watching things for the Bitcoin community at large, and especially for the Midwest, keep your eye out for the U.S. Blockchain Coalition's progress that they're making in Washington, D.C. If you're in Oklahoma, keep your eye out for the Oklahoma Blockchain Coalition that'll be announced soon. You might be watching this, reading this, hearing it, and it's already formed. So those aren't events, but there are things that are happening, and I can't speak to all the details, but it's going to be some incredible progress in our industry on a national level.
Okay. How do we connect with you? Do you have something?
So I think you invited me to come and speak to you because you saw my interview on Matthias Cobb's video on Opalesk. And in that interview, I also gave a prediction. And because I'm so long-winded, Matthias cut out my prediction. So if you Google my name, you'll see that there is a long interview. And then there's sort of this edition, sort of like 10-minute edition that was released 2 years later. And that is because when I was being interviewed in 2014, I made a prediction as to where the market would be in the first 100 days of the next presidency. So just before the midterms of 2014, when Barack Obama was president, I was predicting where the stock market would be in the first 100 days of the next presidency, when it was believed that probably the nominees were going to be, Hillary Clinton and Jeb Bush. And I said, regardless of if it's Hillary Clinton or Jeb Bush or somebody else, whether it's a Republican or a Democrat, I predicted where the stock market was going to be in the next 100 days of the presidency. I'm not going to make a prediction here, but I believe.
Come on. Man, we've got some exciting.
We'll cut it out and bring it back 2 years later.
Yeah,
I'm not going to give you a prediction on the stock market, okay? Because we're just not there yet. I think it is very probable that Donald Trump I think it's highly likely or highly probable that Donald Trump wins the nomination. I think more so now, what I'm trying to say here is that more so now than in 2014, who the next president will be will have a significant impact on the economy. And what I was saying back in 2014 was that regardless of who the president is, the economy was going to be strong. Bear in mind that I was making this prediction in 2014 when the bottom of the market was 2009 and the market had rallied for 5 or 6 years so far, and people thought that the market was going to pull back. And I was essentially predicting that there would be no pullback and that the market would get to 20,000, which was a ceiling. Right, it was a mental ceiling. It never gotten there, and would blow right through it as if it wasn't a mental ceiling, just blow right through it. I think that the American economy is far more fragile today than it was before, and it's not because of market fundamentals. I would say I believe much more in behavioral economics. I believe that Americans have criticized the American economy so much that they have undermined the belief, because fiat currency is a faith-based economy, they have undermined that faith in the dollar and the currency. The conservatives are saying that the faith has eroded because of the printing of money, but the printing, in my opinion, and it's not opinion anymore, it is a fact. Printing money does not cause inflation. Okay, we have printed 18 times more money since 2009, 18 times more money. And maybe America's had 100% inflation since 2009 and 2013. So if something grows by 18 times and only doubles, then the correlation coefficient is negligible. Okay? So what I'm trying to say here is I will make this prediction. I believe that by the next president, so 2025, what the price of Bitcoin today being at just under 30,000,
29,000.
29,000 will seem like chump change. As they say in Bitcoin, there's two great times to buy Bitcoin. And when it first came out and today, okay? So I'll make the prediction that in 2025, with a huge variance, right? So if we happen, where the halvening is in 2024, okay. Within 2025, we will look back at today's prices and say, I wish I'd invested when Bitcoin was 30,000. So what I'm saying is that I don't believe that the dollar will collapse. We are not going to be in the Weimar Republic with rampant inflation. And gold, great. Treasuries and fixed income, not a good idea. Bitcoin risk-adjusted returns. Bitcoin is a screaming buy. Don't get into the bot. Don't try to time the bottom. Don't try to time the top, but get in when the Bitcoin now is below its mean, and get out of Bitcoin when it's well above its mean. The difficult part, and I'll end with one last point, okay? Everyone knows that you should buy low and sell high, and yet many people still buy high and sell low. And the reason they do that is because they really research their investment. They hear about an investment, it piques their interest, they monitor it, they look at it, so on and so forth. It keeps going up. Now they're convinced that they should buy it because it's that prediction that dropping the dime, that investment idea has borne out, and so they buy in, right? Then it sort of tops out and comes down, and they lose faith. They lose faith in their conviction to buy. So this is called the Gartner hype cycle. If you can understand the Gartner hype cycle and where we are in the ebbs and flows in investments, it's called being a chartist, okay? If you can understand where you are in the ebb and the flow, I would say that Bitcoin, because of its volatility, is relatively easy to time to get in and relatively easy to time to get out. I'm not saying it's easy to know exactly when the bottom is and when it's exactly the top, but that volatility allows for investors, given that the last high of Bitcoin was 65,000 and now we're at 30,000 and it was at 14,000 just like a month or so ago. So it has doubled in a month. That sounds like a lot, but even though it's doubled within a month, it's still half the price of where it was.
Yeah.
So it still has plenty of headroom. So the beauty about volatile investments is that it's relatively easy to get in, to time the bottom, and it's relatively easy to time the top. So my prediction is that 2 years from now, like I did in 2014, 2 years from now, you will regret not having bought Bitcoin today. That's my prediction.
Yeah, 30,000 is just like a giveaway.
I believe so.
Okay. I like it. So is there a way to contact you?
Sure. Giodell.com. That's a combination of Giovanni and Ransdell. So GIODELL.com. That's our site. You can reach out to us there. My email is chris@giodell.com. And as the advisor, it's my responsibility to answer all the technical questions. So I'm found on LinkedIn. I'm found on most social media platforms, Telegram, WhatsApp, all those places that all the Bitcoiners have to have their preference of where to communicate. So that's the easiest way to find us. Yeah.
Very cool. Any last minute?
I want to add one thing.
Sure.
Okay. Chris named the company Giodell because he appreciates the insights that I brought to what we're doing, but I didn't co-form this business
Correct.
with Chris. He's only added my name to it because he appreciates the insights that I brought, but this is his business. He launched it. He's the idea. I'm backing him. We're not equals. He's the brains. I'm a little bit of the power, but he's really the brains. Okay.
Yeah.
So the fact that it has our names in it is only him being nice and kind and respectful to me. But
And to be honest, it was because we needed to put some kind of name on a piece of paper at one point in time, and just because we kept talking about it, and I just was like, GeoDelt. And then people go, that sounds really cool. And so it was, a lot of things start off as that wasn't intended to be the name of my company, but it became the name of my company. And
You got to have something to buy into. So you've got a platform, you've got a name, and now people can connect.
and
And we
honestly,
can connect with where it came from.
honestly, we focus mostly on, if we're like right now, we're acquiring a mining operation here in Texas, and so we're going to be focusing on marketing that. GeoDelt itself is not intended to be this glorious, billboard of identity. I'm here to help advise, facilitate, and fund visions that are outside of us. Bring the syndicate members in. Say, you guys are who I'm here to serve.
you can cut this in post if you want. If people want to get in touch with us, I would recommend they go to you.
Yeah.
Okay, if you form your own sub-syndicate, given that your viewers respect you and trust you, then they can join your syndicate. You use that credibility and trust that you have with your listeners, and you are the iron that sharpens the iron. You're the one that holds the investment opportunity feet to the fire. So if you want to make money, if your investors trust you, if they like your, the way you monitor investments and, pick investments and the opportunities that you hit the bid on, then I would recommend that if they want to get in on Chris's investments, they contact you. That is
It also makes my job easier because I talk to you.
Yeah, no, having a conduit in there. So we'll have a closing adjustment, then we'll do that. I think that's great. I just want to thank Giovanni and Chris for jumping in today. A great show. I love all the things that you guys shared in the insight on the Bitcoin community and the mining side, right? That's a whole different avenue. I know most of you don't spend as much time on that. We always talk about investing in Bitcoin. If you want more information with Chris, who will be the primary one that can answer a lot of this stuff, just give me a call, give me a contact. You can find me on my YouTube channel, Sean Corbett, ShaunCorbett. It's a great way to see podcasts and things that I've created. And then you can anyone can call me at any time, 214-228-0383. I appreciate it. And until next time, thanks.